Hi, everybody. This is Marilyn. Do we have any audio for this? Thank you. Hello, everybody. This is Marilyn, and it's time for the NIN edition of Welcome to My World. This is the 18th of May, which is a Wednesday. This is Crude Oil Inventory Day. And so, I really don't like to have to roll the contract on inventory day, but today was one of those times when we really needed to, because the active moved from June to the July contract, and there's still plenty of volume in June, but going into the close today, that will dissipate, and tomorrow will be the last day the June contract will be traded. Right now, the volume difference is 229,000, about 230,000 on June, and about 330 on July. You can kind of, there's a lot of places you can figure that out, but I like to pay attention to the volume number right here on this time and sales, because if you notice in the mornings, early in the mornings, some of you fire up your computers about, I don't know, 6:37 or earlier, but you'll notice that that's in the 50s and sometimes in the 40,000, 48,000 to 52, 58,000, something like that. And you also will notice at that time that the expected volumes they're just not very exciting. So crude oil can give you some trades during those hours, especially in the summertime. Seems to be a little bit better to trade 7:30 or something like that. But anyway, this morning we've had these indices yesterday afternoon. Do you remember yesterday afternoon I pointed out that when you have choppy chop 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 all morning, very, very often in the afternoon you get a nice trend, and boy did that ever deliver yesterday. So this morning we've had some pretty nice trends in all the indices. They're all equally just about the same. YM and ES seem to be in lockstep, and then TF and the NQ are a little bit stronger today. Those two 30-minute candles, both of those markets put up about 10 and then again about 10:30. They were definitely stronger than the other two. The big scene of the morning here has been these bonds. I mean, my goodness, what a sell-off in bonds. If you don't keep one of those charts up, I'll show you on camera mine, which is right here. And this started right over here about, I had a little box I'm fooling around with a couple things here, but this started right here about 9 o'clock with a big sling. And in Lori's world, I don't know if this qualifies as a third bar sling, but it kind of looked like it to me. And down and down it went, and boy, it showed no signs of weakening. I have seen Daryl on some video, or at some time it's stuck in my mind, because I was thinking, I don't know if I can do that. But now this is a perfect example, because after you've had a big run like this, he talks about trailing your stop with the bottom of the previous bar, particularly when it gets way, way down here. And that likely would have gotten you stopped out right about here, darn close to the bottom. Or if when the next bar forms and has gone down, um, sometimes those can work. If you get stopped out and you didn't like it, the trading police are not going to arrest you or whatever for getting back in to the same trade. And rarely do you see bonds go like that. I mean, that's really significant. This probably has something to do with the fact that the Feds are going to release their last meeting minutes at 2 o'clock. And there's probably lots of chit chat and banter about the possibility of them raising interest rates in June. They've been talking about it. They've been trying to talk themselves into it. When interest rates go up, the price of bonds will respond by going down. So, and bonds have been at very high price levels. So, if they do raise those interest rates, you can expect to see the price of bonds drop quite a bit. So on and on it goes. This morning we had the talking heads just never cease to amaze me. They act like they're just absolutely astounded that there's more inventory build than anticipated. What on earth did they think was going to happen when all the fields in Alberta are shut down, and the Middle East is in the shape it's in, and they're having difficulties in some of those countries, Libya and Iran, to name two, getting their oil out into the market. And then we have Venezuela about to self-destruct, 100% self-induced. But these kinds of things will affect the crude oil market. And it wasn't a huge amount, but it was well over forecast. So anyway, one of the things that we're all trying to get a better lid on this chop business. Oh, I'm sorry. Whoops. Let me see if I can get this crude oil chart back here. I wanted to show you something. Here we go. But when you look at crude oil, this crude oil bus driver has definitely been very hesitant to go below the green ice. Doesn't want to go on that side of town. And has been hanging out. Look at all these tall, choppy bars sitting here going right back and forth over settlement. So when you see stuff like that, just go do something else. Find another market. But please don't be trying to trade crude oil in this kind of a thing right here. This is insane. Finally, it did break out a little bit above the high of the day, but every time it has, it doesn't seem to want to do it very much. This may turn around. I mean, who knows what it's going to do. Brent is not particularly active right now, and I'm watching the continuing contract on Brent. I don't watch the current contract because Brent is a little bit of the benchmark for what's going on with the West Texas that we trade. But Brent got up to it put in a high today at 49.84. So this may well 50 is a huge psychological number in crude oil. So we'll see. The high today in this July contract is 49.56. So we'll see what happens. The Canadian dollar has responded very well today. I believe there was some news this morning on the Canadian dollar, but it has it's been a pretty happy camper compared to what it has been. The VIX right now, I've got it showing at 1542. It just seems to want to fool around here between about 15.5 and 13. It can't seem to make up its mind what it wants to do. So the dollar and the euro both have been real choppy, and so has gold. But gold did trend, and this morning it went right from one swing high to the swing low to the swing high to the swing low. So sometimes you can spot that, but keep in mind that gold and bonds both close at 130. They keep the electronic trading that we do will continue, but there will be a little change going in there. So be careful of the 130 timeline on those. Anyway, I think that's about all I see. Tomorrow morning we are going to have, let's see here, 8:30, we've got the Philly Fed manufacturing and our claimed unemployment, which they've got forecast at 276,000. And one of these FOMAC fellows is going to speak at 9:15. With the release of the minutes at 2 o'clock today, I'm not too sure what that will portend. And for those of you who trade Nadex, the nat gas inventory report comes out at 10:30 tomorrow. So just be aware at 8:30 tomorrow morning when those news numbers hit, because it might it's not a usually good idea to get into a trade right there at the spot of 8:30. Give it a chance to decide what it wants to do before you jump out too fast. So anyway, this has been my view from my world in Apex land, brought to you by Apex Investing. I'll see you tomorrow. Thanks.